Thursday, April 8th, 2022, Monaco 64, home of alternative economics and contrarian views. Today, I'd like to talk about how the pillars of the fiat dollar system or the post-Bretton Woods system are toppling over. Before I start, though, I'd like to talk a little bit about the mental aspect, the psychological aspect of what's going on in the world right now, because it affects everyone quite a lot. Having lived on this planet for quite a few years, I've never experienced an environment like we are experiencing now, where there's very little trust in authority. There's a lot of division within the public. And of course, that's being pushed by the powers that be. And why are they doing that? Well, I think it's intensifying because, as I said in the beginning of this report, it's the end of a system. And the powers that be are vying for remaining in power, and they're doing desperate things, and they're treating the general public with contempt, in my opinion. And that's why it feels crazy. And what do you do in such a situation? Well, personally, I try to switch off. Especially in the last 6-12 months, I've tried to switch off from a lot of what's going on. It's a little bit like if you watch television, you start watching a new program or whatever, and you don't like it, you switch off the television. And I think that's where we are right now. Does that mean you switch off from the world completely? No. You try to focus on what you can control and what you can do for yourself, for your family, for your friends, and your community. I guess in my case, what I'm good at is trying to tell people what's going on in the economy, in the monetary system, and how it could impact you. For you, of course, I don't know. Everyone is different, but you need to find your niche, so to speak, and stick to it, I think. The other thing as well is try to not buy into the divide and conquer. And of course, that means not getting angry at people, I think that you don't agree with. Trying to be nice to everyone. I think that's a much better strategy, because the powers that be are trying to keep us divided, get at each other's throat. So I'm going to stop right here. Back to the post-Bretton Woods system or the fiat dollar system. If you want to find out more about the Bretton Woods system, because I'm not going to go over it again here. A lot of you know about the Bretton Woods system. Some of you don't. But I have a playlist with 4 videos, Bretton Woods system. And you can go through that playlist and watch my videos so you can learn a little bit more about that. So 1971, August 15th, that was the end of the Bretton Woods system as it was agreed upon in 1944 at Bretton Woods, New Hampshire, by the major Allied countries fighting World War II. And basically, the system was not a gold standard. It was a gold-backed or gold exchange system where only the dollar was backed by gold, and all the other currencies, of course, were fixed to the dollar. So they were indirectly backed by gold, but you couldn't redeem French francs, Deutschmarks, or British pounds for gold. You had to do it with the dollar, because the US had 2/3 of the gold reserves by the end of World War II. And that's why the US dollar was, well, the top dog, as good as gold as it used to be known. But then the US abused that position, started issuing too many liabilities or currency not backed by gold, and the system collapsed on August 15th, 1971. They tried to keep it going as a fixed system up until 1973, and that didn't work. So how do they save this system? Well, very simply, they did it through the petrodollar, which is basically an agreement between the United States and the Kingdom of Saudi Arabia. And why would that save the dollar? Well, because the Saudis were at the time the biggest oil producers in the world. They ran OPEC, which was the Organization of Petroleum Exporting Countries. And they came to an agreement that Saudi Arabia would only sell its oil in dollars, therefore putting a bid below the dollar, because every country in the world, very few countries produce as much oil as Saudi Arabia and the OPEC countries. So they have to buy oil. Oil, of course, provides energy for the economy of every country, and actually fossil fuels or oil, the byproducts are also very important. And in exchange, the US was supposed to provide security for the Kingdom of Saudi Arabia through the military. And yes, that was the first pillar, in my opinion, of the post-Bretton Woods fiat currency system. What's a fiat currency? Well, it's a currency that is only backed by faith and confidence in the issuer of the currency. It doesn't have any gold backing like the dollar had prior to 1971. And then we come to the 1990s, and I think the second and third pillar were put upon the dollar. And I think that's why the fiat dollar has survived for so long, 50 years, really, just over 50 years. We are completing the 50th year in 2022 from 1971. You look back at fiat currencies, they don't last long. They usually go to zero very quickly. But here, these pillars were put upon this system. So the second and third pillar, I think, were put on the fiat dollar pretty much at the same time. And I'd never thought about that before. And one of the pillars was globalization, the World Trade Organization, allowing countries like China to come in to the World Trade Organization. Yes, exporting a lot of the manufacturing jobs from the First World or Western world. Yeah, globalization, keeping Western corporations going and bringing in not just the Chinese population, but also the Indian population, Brazilian, the BRICS countries came into the system. And that's why they expanded the G7 to the G20. And what that pillar did was it provided cheaper and cheaper, how can I say, goods and services to the Western world. But then you ask yourself, if people in the West are losing their good paying jobs, manufacturing jobs, to China, India, and other countries, even Russia later on, how are they going to pay for all these cheap goods? Well, that's where the third pillar comes in my opinion. And that third pillar was, and it still is right now, financialization, cheap credit. And how do they do that? Well, I think the most significant event for that was scrapping of Glass-Steagall. I've spoken about Glass-Steagall, and people have spoken about it quite a bit in the past. Right now, it's not really in people's minds. But what Glass-Steagall did. And Glass-Steagall was instituted after the 1929 crash back in 1933 under the Roosevelt administration. And it separated commercial banking from investment banking because the 1929 crash really was more than just a stock market crash. It was a banking collapse. And a lot of the banks in the 1920s, late 20s, early 30s, they were involved in speculation, i.e. investment banking, and also commercial banking, which is supposed to be safer. So that's why they instituted Glass-Steagall. They said if you are a commercial bank, you can't be involved in investment banking. And that worked really well up until the late 90s. And have you noticed that a lot of the banking crises started after the late 1990s? Well, that's because the Clinton administration and Congress basically abolished Glass-Steagall and allowed commercial banks like JP Morgan, like Bank of America, Chase Manhattan, which is now part of JP Morgan, and others, to become also investment banks, to be involved not only in stock market speculation, but also commodities. And it allowed them also to be involved in derivatives, which, in my opinion, is a big part of financialization. And what this did is it helped the government, the US government, the Federal Reserve, and Wall Street basically manipulate interest rates to keep people borrowing, to keep asset values high, because the economy was hollowed out because of globalization. And this didn't just happen in the United States, it happened here in the UK and all the other major Western countries. So why do I think these pillars now are toppling over? Well, the petrodollar pillar, let's go back to that one first. We've seen that recently President Biden had to announce a huge sale of strategic reserves. And why? Well, because the OPEC countries, they said no to increasing oil production. We saw last year Russia make an agreement with Saudi Arabia, a military protection agreement back in August of 2021. So why would the Saudis need an agreement with the Russians if they had the petrodollar agreement? The other thing that we're seeing, of course, is the regime of sanctions that the US has been using against countries that don't play ball with them for the last 10, 15 years. That's putting people off. It's pushing countries like Russia and others and China to look at alternatives to the petrodollar because it's become a political weapon. So that first pillar there is definitely toppling over. And now with Russia asking for payment of their commodities in rubles, that's going to accelerate it. I think China as well, they're seeing the writing on the wall. We've seen that Nancy Pelosi was supposed to go to Taiwan. The Chinese weren't happy about that, and now she's canceled the trip. To the second pillar, and that's of course globalization. And I think it's more than clearer now that it's maybe not unraveling completely, but it's changing massively. Even Larry Fink, one of our top friends, right? Not really, but Larry Fink of BlackRock said that globalization, because of what's happened in the world in the last 2.5 years or so, is going the way of the dodo bird. So there's the second pillar there. We've seen all the supply chains being disrupted. We've seen travel around the world being like curtailed, and many people can't travel still to different places. So globalization is really, that pillar is on its way out as well, I would say. And then we come to the last pillar, and that's financialization. And yeah, you could argue whether the way they're toppling this pillar over is on purpose or because of incompetence, but I think it's happening, and that's the Federal Reserve and the other central banks are going to have to follow, and that's if the Federal Reserve, of course, goes through with its quantitative tightening, 95 billion a month. I don't know for how long they're going to do that, but you just have to look at a chart of the S&P 500 and the Fed's balance sheet to realize that if they really unwind this balance sheet significantly, it's going to be the end of financialization. It's going to implode the whole house of cards, all the derivatives. The derivatives, of course, are a big time bomb. Their notional amount are in the quadrillions. It doesn't matter if it's one or two. A quadrillion is already too much. And again, I have a derivatives file in my playlist. Have a listen to that. So that's why I think they've been able to keep the Fiat dollar going for so long. But I think it's almost over. It's difficult to give you a date, but I think it's not more than 5 years. Or maybe even less than a year. So that's, I think, where we're at. I've spoken already about how to protect, how I think people should protect themselves. This is going to be a subject for another video. And anyway, I cover that in most of my videos. So with that, let's quickly look at where the markets are this morning. It's 8:41 a.m. London time. We've got spot gold at 1931. That's down about $1. Range has been 1935.80 to 1927. Silver is up 6 cents at 24.65. Range has been 24.52 to 24.71. So it's been a pretty quiet overnight session so far. We've got the Dow future up 100 points, just under 1/3%. We got the NASDAQ future up 75 or 0.5%, and the S&P future up 1/3%. The FTSE future is up 1% at 76.33, and the Euro Stoxx 50 in Europe, that's up 1 2/3% at 38.61. To the currencies, sterling is down 1/3 at 130.32. That 130 level is a key support. If we break through that, I think we could be headed to at least 125 in the next few weeks or so. The euro is down 1/4% at 108.50. The dollar is up 0.1% against the yen at 124.08. So the yen is weakening again. Last week, the dollar went up to 125, which is a key level. Then it dropped back to just below 122. And now the dollar is gaining ground against the yen again. That will push Japanese investors into riskier Western or foreign assets like dollars and euros. So that could be helping keep things going here, the risky assets. The dollar is unchanged versus the yuan at 636.60. The dollar is up slightly versus the Swiss franc at 93.45. Aussie dollar is down 1/4% at 74.63. The dollar is unchanged versus the Canadian dollar, 125.93. And the Kiwi dollar is down 0.5% at 68.59. To the general commodities, WTI crude back below 100. We're at 95.90. It's unchanged overnight. Brent crude is just above 100 at 150 cents. It's unchanged. High-grade copper is up just under 1% at 475. Natural gas, US nat gas continues to rise. It's at 641. It looks quite bullish, I would say. It's up 2/3%. To finish off, let's look at the bond market. Yesterday, notice that the curve steepened. So the difference between 2s and 10s have become positive again. And yesterday, the longer end of the curve, like the 10s and 20s and 30s, yields went up. And in the short end, they didn't really do much. This morning, though, the 2-year yield is up almost 5 basis points, and we're at 251, while the 10-year is unchanged at 266. So the curve there has disinverted. Maybe the Federal Reserve is trying to keep the curve from inverting. And why would they do that? Well, to keep an artificial signal that the economy is okay. And they do that, of course, maybe by announcing the quantitative tightening and also the sell-off of longer dated securities that they hold. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.